Well, another negative week in risk. We finished the week at minus 22. Still not very worrying, but it's getting there. As we can see over the course of the week, the model went all the way down to minus 28, and and then minus 22 it closed, with a poke at minus 12, but still a negative week. We did close the week slightly down, not very much, about 10 ticks in S&Ps. But what's worrying is that pretty soon the models are all going to give a sell signal. Close the week at 5. So course of the next couple of weeks, I would definitely expect a sell signal and some more weakness. You see the moving average closed at 0.11 on the weekly model, and probably it's going to give a sell signal at the end of next week, unless we have a very surprising recovery in a strong market. I don't expect it, because as you will see in the video, I expect the week to have, although probably a slightly stronger bias, not enough to move the moving averages to positive. As we can see from the deviations, we do have room to go slightly higher towards this 29, 70, 80 area in the S&Ps, but it's going to come from some sectors which are already quite overbought. Utilities are overbought, and XLB is not going to be much help. XLK could make a slight push, and that is the 7,800 area in NQ, which is going to be a good sell. Overall, I expect the market to actually trade in a range, and really the one which I like least is XLF. Can push a little bit more, but then is likely to come down and trade down to the green line. Expect XLF to do a swan dive and then bite down here, and that should coincide with the market going and testing the 2868 level that I'm going to talk about later in equities. And here we have a chart of the 2-year. It absolutely collapsed on Monday to 153, and now it's slowly making its way back towards the 170 level. I think 170 is going to be 170, 171 is going to be very good resistance, and probably a place where to buy some calls on the futures. I doubt that it breaks 154 again next week before the Fed, but certainly is going to be supported around the 170 level, and that is where I'm looking to put on a little bit of a position, looking for the market to move back down towards the 150 level sometime before the Fed in September. The 5-year, much like the 2-year, got to a very important level. This has been here forever, 146. It couldn't penetrate it. It's coming back to fill the gaps and basically get to around 168. I would have thought that once it gets to 168, 170 is a sell zone, and then we slowly come back towards this 145. I think all the bonds are in major bull markets, and it's going to take something pretty damn spectacular to end it. So any pullback, as I've just shown you, 168 to 170 is going to be very well offered in the futures, and that is where we should take advantage and put on a little bit of a position. If we look at a weekly chart of the 10-year, much the same story. We got to the very important level 169, tagged it, went through it, and closing the week with a shooting star. Just the shooting star also, just the same as the equities are having a shooting star. Quite a possibility that we go very close back to 2, let's say 196, 197 next week. And that is the level that I'm looking for to put some call options on the futures, looking for another move back down towards this very important 169 level at some stage. This is the chart of the spread between the 10-year bonds and the 10-year in the US. I think it keeps on trucking towards this 210 level at some stage. And therefore, that is why I think the dollar is not going to make much headway over the course of the next couple of weeks. I think that the odds are that just before the Fed in September, we have one last push in the 10-year, and while the bonds remain steady, we go back up towards this 213 level. That's also why I really don't see much headway to be made in the US dollar over the next couple of weeks. The euro against the dollar, well, it just won't give us any satisfaction. Probably an ABC, probably a retest of this 1280 level where the 200-day moving average is. Take out all the stops and then around the 112.90 area, and then come all the way back down. That seems to be the favorite for the time being. See no reason to change my mind that we are stuck to the moment, but at some stage when we open up these Bollinger Bands, I still think that we fall out of bed. It's not something that's going to happen immediately. It's not something that's going to happen certainly for the next couple of weeks, while the 10-year is weaker than the bond. Just like the Euro USD, the DXY is not showing any signs of trend for the time being. It is very, very difficult to make heads or tails of this, but the important thing is that we are remaining above the 200-day moving average, and we are remaining above the very important pivotal 96.47. As long as that is the case, you would have thought that any ABC down towards that 96.47 is an excellent opportunity to buy again for another move back up towards the highs. While the interest rate differentials favor the US getting weaker against the bond, we are likelier to test the 200-day moving average and the 96.47 level rather than go straight back up. But once that's happened, I would have thought the move back up towards 99 and the highs should be almost a certainty. Weekly chart of gold, well, it got right to where I said the extension was here at 1520. We met the objective. It would be natural to have a couple of weeks of consolidation and stopping everybody out below 1457, let's say. That would be my favorite move. Anything down here, again, time to buy calls for a further move back up towards the 1600 area. If we try to enlarge this, we can see how beautiful the touches are. It's unlikely not to stop everybody out because people have the stops now at this level, and to me it would only be natural to get a nasty move in gold back down, which is a buy again around this 1450, 1460 level for another move back up towards the 1600 area. While we're at gold, this is the chart of the S&Ps against gold, and as you can see, it's very likely to retest again this 2087 level that was so important on the way up and on the way down. I would have thought that that is a couple of percentage move in gold off and equities up, and once we've done that, maybe we can retest the lows. So it's going to take some time to get this trend in gold going again. So probably this would tell you a couple of weeks of equity strength and a couple of weeks of gold weakness. Here we have a daily chart of ES. If we try to enlarge these last few days, we can actually see why the market found it so hard to go any lower. It's simply because it was below the Bollinger Band, the lower Bollinger Band, which is this line in red. It is now likely, because it closed the week with a bit of a doji, to actually start pushing up next week, since it's OPEX, and that will actually align with what you'll see later with gold. I would have a stab that the best the market can do next week is labor between 2900 and 2970. We have this 0.76 and 0.78 retracements on the Fibonacci's 2970s. I really don't see it beyond there. I would have thought that any push early for OPEX next week into that area is likely to be met by selling, which will take it back down to the low, to retest 2864. I have no doubt that over the course of the next, I don't know, 10 days, we will retest 2864. It's just a question of how many people would stop out in the meantime. I would have thought that everybody, including his grandmother, is going to get stopped out on this move back up to 2975 or so. And that will provide a wonderful opportunity, a very risk reward for shorts, back down to 2864. Once we've retested 2864, then we have a chance of going back up. But I think we do certainly a gap fill and a retest of the lower Bollinger Band, not necessarily next week, simply because it's OPEX and it's August, but possibly in 10 days time or so. If again we now look at the weekly, we'll see that we close the week in the green, and you can see where these moving averages come in. We're still closing below them, so this is not bullish by any stretch of the imagination. I just think that we are likely to go up here to 2870 just to stop everybody out who's looking at these, and then reverse. But I think we have a couple of weeks of the bonds backing off a little bit and gold backing off a little bit, and therefore I don't see huge amount of pressure on the market over the course of the next, say, 7 to 8 days. And it's OPEX. OPEX week is traditionally a strong week. Strong can mean up 1%. I mean, we've closed the week almost unchanged, a 0.25% down. That is not very impressive on the downside. I think at some stage we take out the shorts and we go then and retest the 2864 level. Another thing which tells me that we are unlikely to get killed in equities over the course of the next couple of weeks is the behavior of the DAX. I told you that that was a very important level around the 1600 area. This is where the Bollinger Band comes in. This is where the moving averages are. We didn't break through it. We are more likely to go up towards this level just below 12,000. Let's call it 11,930. And that, I think, is going to be a good short for a retest down here around the 11,600. So 11,950, 11,600 over the course of the next 2 weeks in DAX. Exactly the same picture in the stocks. 3,280, touched it, straight back up. I would have thought this kind of level, 3,430, 40, is going to cap it next week, and then over the course of the next couple of weeks back down to 3,280, which should coincide with the 2864 level in SPX. Have those levels handy, because it's quite obvious that the stocks is very well supported around this 3,280 level, and it keeps on bouncing off it. Since that is the case, there's no point in trying to press the downside. It's unlikely to work. DAX and stocks in agreement. You'll see gold in agreement, bonds in agreement. I think some initial strength over the course of next week in equities is more likely than not. If we look at volatility, I would have thought that at some stage I expected to come down towards this 15 and a quarter level. And from there, after, trading 15 and a quarter, 17 for 3 or 4 days or whatever, then it can go up towards, a retest of the levels that we traded around the 21, 22 area, and that should calm me down again. So I think that could easily coincide with this, sort of early strength at some stage next week. Say trade between 28.90 and 29.70, and which would coincide with the VIX coming down to 15 and a quarter. Basically next week, a bit of a gap fill week, stop people out week, bonds back up week, and then go and retest the 28.64 level. And really, I would expect it to trade at least 20%, if not 22%, when it does that, because people will really be reaching. But that probably is going to be another good selling opportunity. But let's not prejudge it. I think that is what is more likely to happen: a push down to 15.25, stay there, go back up to 20 or 21 or 22. That is really all meshing together with a stronger week in equities next week. We don't see any weakness, huge weakness in Europe. We don't see any huge weakness in the spreads, and therefore that probably means some backfilling up towards that 29.50 to 29.70. If we look at the RUT, the Russell, which is actually the weakest of all these equity indices, we will see that this is a weekly chart. We'll see that the weekly Bollinger Bands were touched last week, down at the 1480 level. I tried shorting it, bought it back just below this because I saw that it was below the weekly Bollinger Band. Again, since this is the weakest, it tells us that we are unlikely to make much headway below 1480 next week, and that really suggests that at some stage we take out the stops above the highs here, maybe get to 1540, 1550. Well, I will try to definitely short it for another move back down. So it's really all falling into place in equities. I think next week it is unlikely to be a very weak week as people are expecting. It's OPEX week, more likely to stop people out on the upside, because people, I can tell, are now fighting the tape. And so on to the biases for next week. I've given you the levels in 2 years. 170 is the level that I'm looking to trade. I have very little doubt that at some stage there will be a panic and people will sell it all the way down to 150. 5 years, the target was met. Now it's backing up to 168, 170, and then it'll go back to the 146 level that is so important, and we met. The 10-year note, 169, was met, resistance around the 196 area, and looking for basically a range trade with 196 as the top and around 170 at the bottom for the time being. I think the spread against the Bund and the bubble of the 10 years goes towards to 10 to 15, and that is why the dollar shouldn't really be able to make too much headway. Here we are. 29.55, 29.70 area is going to be a very good area to reshort, a very good risk-reward area. I don't think it goes through it next week, but I don't think the market is weak next week. So we'll be looking to buy some, say, 3-4 week options to see what we can make out of that. 28.64 should be tested over the course of the next 10 or 20 days, but I think it's going to hold for quite some time on a weekly close. NQ, similar to this 29.55.70 area, the sell area is 7800 to 7830. We are going to definitely be doing something there. IUT, I showed you the support around 1480 on the weeklies, and since that is the weakest index, I think the downside in the others is limited, especially because we have the 11,500, 11,650 huge support area in the DAX, and I showed you the stocks, which coincides with it. If those are all going to be very well supported at those levels, it's unlikely that we should bet that S&Ps go through 28.64. So, since the differentials are not in favor of the dollar, this is, still works. Those are still the levels that unlock the moves. But it's more likely next week to stop everyone out, as I showed you on that Euro USD chart, when it gets to near 113, and then probably reverse course and basically piss everyone off, as it has been for quite some time. Thank you very much indeed, and have a wonderful weekend. Tweet you on Monday.